A bit of an uptick in oil prices today following comments from OPEC raising hopes of a coordinated production cut. But according to some experts, if such a cut did in fact occur, the effect would be negligible. So it raises all sorts of questions and concerns about energy and our economy. To talk more about it, let's welcome in the founder and managing partner of Harrington Capital Management, Kyle Harrington. Skyping in from way out west, if I'm not mistaken, and right here beside me on the anchor desk, former Congressional Chief of Staff Glen Downs. Now, yesterday, rumors of production cuts from OPEC gave a boost to oil prices. Kyle, what is the outlook? Do you think there's anything to that?
Well, I think a couple things, JD. I think that, fortunately, the United States has demonstrated more domestic production with respect to oil, and I think that that process continues. So from the perspective of pricing, my hope is that we become less dependent on the Middle East and less dependent on decisions that are being made that you just mentioned.
Now, Glen Downs, we always hear that this is a double-edged sword. You know, lower prices at the pump help consumers, but hurts the financial outlook on Wall Street. Why is that, and do you think that's going to remain the case?
Well, absolutely, it is a problem. For example, in the oil patch, a lot of loans have been made by commercial banks, and those loans, the value of those loans are underwater now. So these banks, which are facing a very difficult time now in terms of financial stress, are being asked to really write down the value of these loans and try to get regulatory forbearance. So it's a problem.
You know, it was the late, great Milton Friedman, Kyle, who said, if you want less of something, tax it. And now you have President Obama proposing a tax on the oil industry, requesting $10.25 a barrel in terms of taxing oil companies to combat climate change. But that's going to worsen the economic climate, is it not, at least for consumers?
Absolutely, JD. I think that's absolutely the wrong decision given the current economic climate and, as Glenn pointed out, the stress on not only the banks with respect to loans to these oil companies, but the oil companies themselves are under enough layoffs, under enough pricing pressure right now, that could really put the economy in a vibrational tailspin.
Let us talk geopolitically about what's going on. China, despite the economic downturn there, pumping billions of dollars into Latin America. It's been that way for the past 2 decades, but in 2015, Chinese banks sent nearly $30 billion in loans to Latin American governments, more than double the amount from 2014. As you see that happen, Glen Downs, there's a geopolitical component. But what is the economic component for our neighbors to the south and for the Chinese?
Well, you know, David Stockman talks about the great deformation, that you have all these government actions by our central bank, other central bankers, and in this case, the Chinese central government trying to affect geopolitical goals, but there are economic consequences and all sorts of malinvestment. So when these bubbles, debt bubbles burst, or they start to go flat, the headache, the hangover for those that debt high can really hit the places like our South American friends hard.
Let me turn to Kyle. Kyle, there you are out west, and boy, there's been, on our version of the Pacific Rim, on our west coast, there's been almost an indulgence of Chinese economic expansionism. What is your concern about the Chinese and Central American nations?
Great question. I think, JD, my concern is a deep concern. I think that the problem we have in China, unlike the United States, is that I don't really think you get a good glimpse into their economic numbers as an analyst or as an advisor would look at numbers. So, for example, consumer confidence or manufacturing data or any economic data that is reported out of China, I'm always very hesitant to really believe the true depth of those numbers. So, in short, I think if you look under the hood in China right now, I think there would be more disappointment than you think. And as a result, given the size of that economy and the population, could be very detrimental to the rest of the world.
How appropriate was, Kyle? You were talking about looking under the hood, and we had video of Chinese car makers hard at work. Let me bring it back here at home, Glen Downs, because we look at Wall Street, we look at hedge funds, and you pointed out to me via email a scheme at work, apparently, to have the hedge fund guys get into subprime auto loans. What on earth is that about?
Well, what people are looking for is the next big short. Last time, there's a movie out now that people that have betted against the fragile mortgage market at the peak of that market. And now people are sensing that we've reached an auto bubble, and they're looking for places to do it. They can't find banks to take the bet, though.
Yeah, I was just wondering, Kyle, so the bottom line is this: save your money and buy a used car with cash on the barrelhead? What do you think, Kyle?
Pay down the debt on your house, pay down the debt on your car, watch and wait, be very vigilant and very prudent at this time.
Pay things off. Good advice for fiscal conservatives, huh, Glenn?
Amen.
Good enough. Kyle, way out west, we appreciate, as always, your insights and analysis. And Glen Downs, right here next to me, alerting us about the subprime auto loan scheme that may not come to fruition, at least we're hoping. We appreciate your insights. So we had quite a far-ranging discussion, from energy to Chinese investment to Central America, heck, even a scheme about hedge funds and subprime auto loans. A lot we covered about the economy and geopolitics. You heard what our guests had to say. What do you have to say? I would love to hear from you, and here is where you send your comments to me. Send them to newsmaxtv.com/comments. Up next, Herb London assesses the situation involving North Korea.